Brian Shannon here from AlphaTrends.net. It is Friday, June 1st, 2018. Let's take a look at the numbers before we look at that chart. But for the week, it was mostly positive. We did see that the Dow lost a little bit of ground, but really no one pays attention to that, right? And the oils lost about 3% as well. And financials were down a little bit. So let's take a look at the charts and make some sense of it. Overall, as I said, the S&P 500 was not only up 0.5% this week, but it survived what was some headline risk. On Monday, we saw the market gap down and then subsequently recover during the week. You can see that the market closed just below that year-to-date volume weighted average price and below that 20-day moving average. But on Wednesday, those levels held on the intraday pullback. So let's take a look at that on an intraday time frame, looking at a 15-minute time frame. And this right here is Tuesday, and we had that gap lower, of course, and things were looking pretty ugly at that point. At that time, the market was breaking down. It did rally at the end of the day to close right at the volume weighted average price for that day. And then on Wednesday, we saw a move higher, followed by a pullback right to the volume weighted average price from that gap, and the buyers emerged. And not only did they emerge right there at that volume weighted average price level, but of course, that was also the location of the 20-day moving average and just above the year-to-date volume-weighted average price. If you look at volume the way people tell you to look at volume, they will tell you that this was a negative week because we saw two big red candles. The bigger volume days came on the downside, and the lower volume days came on the upside. But what's more important than that is the average price that this market traded at this week, and that was right here. The volume weighted average price for the week was 271.15-ish. So what does that mean? On average, anyone who participated on the short side this week paid 271 or sold at 271.10. Anyone who bought long on average bought at 271.10. So what's the psychology of that when the market's at 273.64? Well, the shorts can't be feeling too good about themselves, and the longs are in a profitable position. So I think for next week, what we want to see is that as long as we can continue to hold above about 270 and a quarter or so, that you have to give the benefit of the doubt to the buyers still. And now we have a rising 50-day moving average. We're getting rid of data from 50 days ago. That was right here in that calculation, and that's why this 50-day moving average just began to turn higher again this week. Now, what we're looking for is a move, continued move beyond there. I had pointed out on Twitter the measured move objective up at 275 and change based on the height of this move added to the low right here. So take a look at Twitter for that, and you should be looking at Twitter if you're interested in my message, not just looking at YouTube, because that's where I put a lot of information each week. So S&P 500, I think, is bullish, looking like it's getting ready to break higher and follow in the footsteps of the NASDAQ, which did break beyond this prior band of resistance and closed pretty much near the high of the day. This market was stronger throughout the week. It did have a little bit of weakness on Tuesday, but then as it got back above that rising 5-day moving average, the buyers maintained their control. And the Russell 2000, as we know, has been the stronger market recently. It came down and tested exactly where it was supposed to hold, and that was at this prior band of resistance right in here. So prior resistance broken tends to act as support. It did hold as support. We also have that rising 20-day moving average in there. When we look at a 15-minute time frame, same thing here. We had that weakness on Tuesday, but the market recovered. It then found support at the rising 5-day moving average, and the buyers are in control. I think for next week, you want to see it maintain above about 162 and a quarter to continue to look for continued upside momentum in the Russell 2000. Semiconductors, look at that. They closed right at the high of the day here, and the daily time frame, we continue to chug higher in this market. It's providing the leadership for the NASDAQ rather, and there's it's been choppy action, but again, with a rising 5-day moving average, it's foolish to try to sell it short. The financials, XLF, this group still is the group that gives us more reason for a little bit of concern. The volume weighted average price off the lows of May was broken this past week, or actually last week, but we never were able to get back above it and hold above it this week. When we look at the 15-minute time frame, here we can see it's somewhat positive that we, held above the volume weighted average price from the Italian news. And right now, I think that for next week, we want to still be cautious about these financials, but 27.10 or so is going to be an important level. If it breaks below 27.10, and then let's say it does something like this, then I think you'd be looking for more weakness in the financials. And if that were to happen, then it's possible it could spill over into the broader market as well. So be aware of that. We, continue to test this rising 200-day moving average, and we're below a declining 50-day moving average. So realistically, they should just be avoided. Let's talk about the energy stocks. XLE, this one, if you look at the weekly time frame, of course, we talked about not buying a breakout here a couple weeks ago because it was extended. When you look to buy a breakout, you can't just buy because it's a new high. You have to ask yourself, where had it come from? And in this case, it had rallied from basically 66 up to 79 to break out in here. And avoiding it saved you from the headache of this pullback. Well, now if we look at where we are, we broke out. Most likely the people who chased the market has spit it out by now, and we look at a 30-minute time frame and say, what's the average price paid since that peak? Well, now you can see the buyers are starting to gain back control and are finding support for these the energy names near the 76 level. What we need is a day or two for this 5-day moving average to kind of flatten out. Maybe we see a pullback like this and then continuation higher. But I think you have to look at the energy names as something that has the potential to regain its upward momentum. The weekly time frame still looks constructive. It got extended, it's pulled back, and now it's looking like it has the ability to move. I had mentioned the stock WRD this week that it looks like it's building energy and continues to look like it's building energy. This is an energy name, building energy. It's got this resistance right in here. I think that you could probably get long. You could call this a shoulder, a head, and a shoulder here. I think you could get long above this little peak right here, and then depending on your personal time frame, your stop would go, underneath this higher low, or maybe even way down here. Personally, I would put it underneath this level, but I'm not here to tell anyone what to do. You've got to figure out what your own time frame is for yourself. Abbott Labs, maybe a boring stock, sounding stock, but it's been in a nice uptrend, since breaking some resistance middle of last year, about this time last year actually, and it's consolidating up in here. Now in the daily time frame, it's got this little consolidation going on. It looks like if this stock can get back above the recent highs, then perhaps Abbott Labs could make a run for its all-time highs here. So that is, right around in this area. I would say if you were going to get involved, I would probably put a stop underneath this higher low. Maybe you would want to give it more room to this higher low for the stock. Either way, trading is about knowing your time frame first and foremost, not listening to anyone who tells you what to do. In fact, I go out on my way to make sure I'm not telling anyone what to do, but to understand the trade yourself and make sure that you make the trade your own. By making the trade your own, I mean looking at it and saying, okay, well, that does make sense to me, but I think it's okay to buy, on a pullback to 62. Fine, make the trade your own, but always remember this: the cornerstone of any successful trading or investing program is rooted in risk management. Risk management is always job number one.